Hello there, you're watching Bizworld. The government will announce a 25 billion ringgit worth of national projects under the Energy Transition Roadmap, which will be unveiled on July 27th. Economy Minister Rafizi Ramli said the first phase of the roadmap will consist of 10 national flagship projects to be developed with the participation of the private sector, which are a part of the government's structural reforms of the economy. He added that since the pandemic, investments in energy transition projects have dominated the global investment landscape. As such, Rafizi is confident that the government's commitment for long-term structural reforms will attract inflows back into the country and eventually improve the ringgit performance. The meeting between Tesla's founder Elon Musk and Prime Minister Datuk Seri Anwar Ibrahim would prompt a chain reaction on the nation's journey towards becoming an electric vehicle EV hub in the region. Sunway University's economics professor Kim Lang noted that a discussion between the global EV giant and the Prime Minister, expected to take place within this week, will also lead to further commitments that could benefit the Malaysian economy in general. Yeo said any forthcoming commitment arising from the meeting will provide the local EV industry with a big boost. He added that iconic investments typically have larger spillover effects through strengthening local and foreign investors' confidence as well as crowding in investments. This could open up more opportunities for the suppliers, service providers, as well as parts and components manufacturers to actively engage with the EV industry. Tesla, headquartered in Texas, US, will be making its official debut in Kuala Lumpur on July 20th.
And then all of these parts, as they are finished, so to speak, are brought to the body shop.
Local renewable energy RE players is expected to enjoy better gross profit margins as the government announced the lifting of the RE export ban in May. According to Maybank Investment Bank, the policy review is aimed at accelerating the growth of Malaysia's green economy. While specific details regarding the mechanism are yet to be announced, they are expected to be disclosed in August or September this year. Currently, Singapore has a target of 4 gigawatts of RE import capacity by 2035. As Singapore has a higher average regulated household electricity tariff than Malaysia, the firm believes this could translate to a better gross profit margin for local RE players. Malaysia will have to rely more on its households to shore up economic growth throughout this year. According to Sue Trin, the co-head of Global Macro Strategy for Manulife Investment Management, the country's growth deceleration in the first quarter is likely to continue, driven by contraction in exports.
Positive signs supporting output there is the fiscal prioritising of low and middle income households for support. If you look at inflation, it looks pretty benign, making it less of a headwind for discretionary spending, and that also puts less pressure on Bank Negara to hike rates aggressively. So, it's quite a balanced outlook would have for Malaysia.
On the ringgit, the firm noted that Malaysia has relatively strong macroeconomic fundamentals despite the weakening of the local currency. As such, it is taking a neutral and slightly positive stand on the ringgit in the medium term. Research firms are taking a neutral stance on the plantation sector, given that share prices in the sector have not moved much despite the recovery in crude palm oil CPO prices in recent weeks. RHB Research continues to expect a gradual improvement in the Malaysian CPO stocks in the coming months as productivity increases amid expectations of a moderate El Niño phenomena. The firm's CPO price assumption of 3,900 ringgit per tonne for 2023 remained unchanged. RHB Research, however, is in the midst of revising its 2024 price assumption of 3,500 ringgit per tonne, depending on the severity of El Niño. While a higher CPO price environment would benefit purer planters more than integrated players, the purer Malaysian players would stand to benefit more than those with Indonesian estates, given the widening price gap. And that's all the time we have for Bizworld this time around. I'm Nadia Azmi. Thanks for investing your time with us.